of your own downfall.
You just have this natural urge to keep jumping into the market. It's all about the art of doing nothing.
In that moment, momentarily, you are looking for revenge trades.
Everybody focuses about analyzing the charts, but not analyzing themselves. The number one thing that makes most retail traders fail is... Hello everyone, and welcome back to the Innovation Market Psychology series. Today, we're going to talk about the silent killer, which is overtrading.
Overtrading is something that we look at when we first start, and it's not necessarily something you perceive as a bad thing. And the reason for that is because overtrading almost seems like a positive. When you think of overtrading, well, if trading makes money, then trading more means more money. And that's where a lot of people go horrendously wrong. When I first started, I always had this vision in my head where, right, if I want, let's say, a Lamborghini, if I can get to the point where I can make 100 grand in a trade, well, if I just do that several times a day, I can buy 4 Lamborghinis in a day. And it's almost the way we trick ourselves into believing it's another form of shortcut. And it's kind of the key that we're going to get to here. Overtrading is essentially one of them things where it's a shortcut to thinking you will get rich quickly. But in the long run, it will cut you short.
To second that, when you first start trading, you don't even really hear the term overtrading. I didn't know that for a good few years until into my journey. I just sat in front of a computer all day and traded as much as I wanted to. Anytime I saw an opportunity or what I thought was an opportunity at the time, I jump into a trade. But it's only when you get a bit more seasoned and a bit further down the line, you realize that there is a time for trading and a time for not. And also, an amount of trading that you should do. With trading, and what we want to talk about today is it's not so much about the losses that you're having, but it's the unnecessary losses that you're having that is the real silent killer to your trading game. The unnecessary losses are the stupid losses. It's all well having a loss in trading. Like we spoke about in our previous videos, of course you're going to lose. You can't trade without losing. But it's the silly, unnecessary losses that you're having that's really killing you. That's the silent killer. We all know those trades where you jump in where you feel like you're missing out, or, you took a trade when you weren't looking at your screen properly, or you're rushing, whatever the reason being, there's those unnecessary losses. And they also come from overtrading. When you've already had your winning trade for the day, but you can't walk away from the computer and you trade again because that overtrading, that greed kicks in and you want to go again. All of the different things we're going to talk about in this video, but it's the unnecessary losses that's the real silent killer. And if you can, and what we're going to do today is talk about how to change your perspective on how much you should trade. And if you decrease the amount you're trading and decrease the amount of losses you're having, then what's going to happen? Your profits are going to increase. Something I say a lot is no trade is often better than a bad or losing trade. And not many people even understand that or really understand the thought process behind it. But it's much better to stay out of the market than to have a losing trade. Having a losing trade can trigger a slippery slope just from having some losses. But if you can keep yourself from having those losses as much as possible, your psychology will overall be better because you're not having as many losses. And your profits are going to skyrocket because you're decreasing the losses and, of course, having more wins.
Yeah, it's a double-edged sword, overtrading, because it's actually detrimental both sides. If you're on a winning streak, overtrading is actually just as fatal as overtrading, on a losing streak.
Yeah.
And they both will likely result in the same outcome, which is either back to where you started or very, very deep holes of losses that you will be hard and struggle to recover from. As an example, let's say you have had a fantastic day and it's very dangerous overtrading when it works, because it doesn't last forever. And this is the same as flipping accounts, and this is the same as everything else. A winning streak, normally justified by overtrading, will be just as fatal in the long run. So let's just say now you've had a day where you've done a bit more than usual. You've gone in and done 5 trades today, which to some people may be an average day and to others be way more than necessary. But let's say you've had 5 winning trades in a row today. The next day, you are very likely going to open your charts and then try and do 5 to 10 trades, and very quickly realize that history will not repeat itself, not for that long anyway. And this is a big issue that I used to do quite a lot. I would have days where I would be on a phenomenal kill streak of just back-to-back trades, making a huge amount of money. By the end of the day, I'd be in a loss. And the reason for that is overtrading. I could not walk away because it's then becoming an addiction. It becomes an addiction to the thrill of just simply opening trades. And having too many wins will almost give you this illusion that it almost separates you from reality temporarily and makes you believe that what you're doing is now the continued path. And you almost feel like if I just keep going, it's going to multiply and multiply and multiply. But on the opposing side, being on a losing streak or even just having a few losses, over trading can turn what is a modest 1, 2, 3, 4% over maybe a day or a few days if you're having a bad day to potentially 50% to 100% of your account. And I also know that because no doubt we've all done this as well. I would stick to risk management and I would stick to 1% a trade. But there would be times by the end of the day, I've probably taken 15 trades and many of them would lose. So even if I'm sticking to my risk management, next thing you know, I'm down 20% for the day, just trading like an absolute maniac.
Yeah, and that's the thing. Even if you are sticking to risk management, which, 95% of retail traders aren't, they're not sticking to that 1% rule. So even if you are, it doesn't mean that you can just keep just trading all day and just be trading like a degenerate and taking 5, 10, 15 trades a day. There's only a certain amount of trading you should do a day. And if you scale back how much you're trading, I guarantee you'll see that your trading will improve. So let's just say, at the moment, you might take 3 trades a day, which, that's a reasonable amount. But let's just say you are taking 3 trades a day. And out of those 3 trades, if you are taking 3 or maybe 5 trades a day, I can guarantee that within those 3 to 5, you're taking an unnecessary loss in those 3 to 5 trades. If you have one loss or 2 loss out of those 3 to 5, one of them is probably an unnecessary loss. And that's the silent killer that I'm trying to talk about. Because if you do take 3 trades a day, let's say you then just, from after this video, and what we're going to talk about is, let's say, okay, you're not allowed to take 3 trades a day because let's just call that over trading. Let's say you're only allowed 1 trade a day. Would you have still taken all of the 3 trades that you would have taken if you're only allowed 1? Because you're allowing yourself, let's say 3 trades a day or 5 trades a day, you know that you've got room for error. So you're allowing yourself to lose on a trade because you know you cannot have another 4 trades that day. Most people don't stick to 3 or 5 trades a day. Most people trade a lot more. But let's just say, for an example, that you are disciplined and you do have 5 trades a day. But even within that, subconsciously, you're sort of allowing yourself an amount of trades to say, well, it's okay if I lose because I'll win on the others. So you're already sort of setting that subconsciously into your mind that it's okay to fail. Yes, it's okay to lose, but you shouldn't be like going into your trading day thinking that, you can lose this trade because you can make up for it elsewhere and focusing on the winning trades rather than focusing on the losing trades. Now, if you go into the trading day and say, I am going to try my best to stop losing and not have a loss, or in the example of if you take 3 trades a day, let's now change the scenario to you're only allowed to take 1 trade a day. How you approach the market is going to be very different, isn't it? Because you're not going to jump in to any trade. You're not going to just see a bullish candle and go, oh, I'm missing out, jump into it. Or you're not going to see a semi-okay setup that hasn't quite hit your level yet, but just in case it doesn't reach your level, you just want to jump in just to make sure you're in the market. All these, there's thousands of different scenarios. But you're not going to take those trades if you know you can only take 1. If you can only take 1 trade, what you're going to do? You're going to sit there and wait it out until it hits your level or hit your region so that you can take the correct trade. And then that straight away means that you're not taking all the unnecessary trades, which normally amount to losses, and you're going to focus on having 1 good trade a day and therefore decreasing the amount of trades you're taking and not over trading.
I would say that actually changes the game. If you were to actually view it in that way, and I would say go a step further and convince yourself that your broker or your MT4 or your crypto exchange, whatever it may be where you are trading, I would create a mental blockage and tell myself in that instance, I'm only allowed 1 trade a day on that platform, as if there is a limit set on that platform that literally restricts you to 1 trade a day. I think if you were to go down that approach, it would completely change the way you view the markets and the way you trade. And that is a very good point. if you even have a window for 3 to 4 trades a day, it just opens that room for error to not take it seriously.
Yeah.
Whereas, yeah, you're right. If you were to just literally narrow down to 1 trade a day, you would be 100 times more selective from the offset.
Yeah.
Because it's literally you have one shot and you need to make it count.
Like a sniper.
Yeah, like a sniper. Precisely that. Whereas if you're given all the bullets to a machine gun or a mini Uzi, you're going to let that thing spray and one of them will eventually hit. But in the long run, how many bullets will hit versus how many bullets have been fired? That could be another way to view it as well.
Well, that's why I've said that before. That's why I trade like a sniper personally. Think about a sniper. What does a sniper do? A sniper might not take a shot for days, weeks, or months. It has to wait in a spot and just wait and wait and wait and wait, and then wait some more, and then wait some more, and it has to wait until it's got the perfect shot to pull that trigger. You're not on the ground with machine guns just spraying everything.
Yeah.
You know, you're a sniper. You're back. You're taking your time. You're patient. You're calm, and you're waiting for a perfect setup. And then when that comes, you take it, and then that means your losses are going to be less and your profit's going to be more just by decreasing the amount of shots that you're taking.
Yeah.
If you think you're taking like 10 shots, you know, there's more room for missing.
Yeah.
But if you take less, then, you know, and you wait for higher accuracy. And then, you know, another thing that I've taught members or spoke to members many times, and when I first introduced it, it really changed a lot of members' perspective. But again, everyone focuses on the profits and the wins, and they don't focus on the losses. Now, the unnecessary losses are the silent killer. Believe me, if you really pay attention to this, you'll see a big difference. Because let's just say you are taking 3 trades a day. I think most retail traders watching this, if you just hand on heart say, yes, you probably do take an unnecessary loss once a day or once, you know, a couple of times a week. You know, if you look at it, don't think about the profit. Think about that one unnecessary loss you take a day. Say you are sticking to risk management, that's 1%. Over a week, that's 5%. Over a month, that's 20%. Over a year, how much is that? So you can see how much money that you're losing. You know, 20% a month, and then over 12 months, that's over 200% that you're losing. Just by taking one stupid, silly trade, unnecessary trade a day. You're taking, you know, for no reason. You think it's okay because you've got 3 to 5 trades to take. So you're like, oh, it's okay. Like, if this one doesn't work out, I'll make it back on the next one. But that's the wrong way to think of it. And that's why you're overtrading. You need to take every trade as serious as the next one. So if you're taking, you know, even if it's just 1% a week, that's 4% a month. That's still 50% a year. So if you take, that's probably a better way to look at it for most, because maybe some of you don't trade as much as take 3 to 5 trades a day. I certainly don't. But let's just say you might take 3 to 5 trades a week. Probably a lot more people are around that level. Well, again, if we're all honest, people who are learning how to trade are watching this, I think you can probably put your hand on your heart and say, yes, throughout the week, I do take one unnecessary loss. So if you can stop taking that unnecessary loss, 1% a week, that's 4% a month, which is 50% a year. 50%. Do you understand how big that is? 50%. You know, most people dream to make 50% a year in profit-wise. So if you can decrease your losses by 50%, imagine how much your profit's going to be. But everyone keeps chasing profits and the big moves, and they want to get like 10, 20% on every trade, or, you know, all the different things that come with the profit side. But no one wants to focus on the losing side. Why? Because it means that you have to look at yourself. You have to analyze yourself. You have to talk about how stupid you're being. You have to look at yourself in the mirror and analyze yourself, which is where most people don't want to start looking. But as in the psychology series, that's what we're teaching you. You know, the strategy is 20%, psychology is 80%. If you just turn and look inwards at what you're doing, then you'll correct all the little mistakes and you'll be far more profitable rather than chasing the profitable trade or chasing the strategy. It's all about looking at what you're doing, and that's where you need to start.
Yeah, the key distinction to mention with that as well, and what would massively even stop the overtrading process, is people were more focused on the trade setup and the quality itself and all the other factors that go into making a strict quality strategy to justify executing in the market. Whereas most people, especially when it comes to crypto, which we are no stranger to seeing 24/7, the only reason you would really be willing to take that many trades without actually factoring in, and you only realize after you've taken that trade and it's lost that it was a bad setup
Yeah.
when you've lost the money. But the only way you would justify doing those things is if you go in with the sheer conviction and belief that it's not going to lose. And that's the problem. People focus, like Bernie said, on the money versus the quality of the setup. And when you narrow it down to just one particular trade in a single day, the whole concept and perception of that setup and trade changes entirely. I see it all the time in crypto. How many people, let's say Bitcoin is at $110,000, which it is right now. If it drops to $109,000, people will go buy the dip. Then it will drop to 107, buy the dip. Then it will drop to 100, buy the dip. The problem is with that, especially when it comes to spot investing on the crypto side, which is no different to overtrading with leverage, people will generally just plow entries into the market on a continuous basis and think of somewhat of a monetary basis that over the long term, this is a justifiable decision. But when you look at something that we do, we often wait weeks to months for price to come down to very specific levels. And in the entirety of that duration of waiting, most people that have bought a lot higher continuously have put most of their money into the market and seeing similar results that Bernie said of a 50% loss in their portfolio by the time we get to our entries. And whilst we wait for those entries to come through, our capital has been preserved. It's obviously a bit different when it comes to spot, but it's a very similar concept that we frequently see within the crypto market as well. It really goes hand in hand. Overtrading with spot investments is no different to overtrading with leverage either.
Yeah, and just something you just said a minute ago is something that, again, I've said many times over the years teaching students is, you know, a lot of people will jump into a trade and then when they're in drawdown, they're doing the utmost analysis. They could be in drawdown. Yeah, I mean, we've all been there. So, you've jumped into a trade, you think it's a good setup. Again, an unnecessary trade that you've jumped into. For some reason, you've either rushed into it or you've had a bit of FOMO, whatever the reason was, you jumped into this trade. But then when you're in drawdown, next thing you're drawing on trend lines, Fibonacci's, you're finding new support and resistance, you're finding everything there is to try and confluence it. But why not do that analysis before the trade? Mm-hmm. Because, what's happened is you're overtrading. You're jumping into a trade for a reason that you shouldn't. For whatever that reason is, you're in that trade because you didn't do your due diligence. So that means that's an unnecessary trade and likely going to be an unnecessary loss. If it wins, it's even worse, like Tori just said, because if you do jump into a trade and it works out, you're going to do the same thing again. And then because your mind tells you, oh, that worked out this time, let's do that again. And then you jump into another trade and eventually you're going to get burnt. But, if that's ever happening to you and you ever are in drawdown or you have a loss and you start finding new analysis, then that trade you shouldn't be in that trade in the first place. So just where you mentioned that, I thought that was a good thing to just jump in on.
Well, I mean, it's real. I've done it so many times. The amount of times I've got myself into a series of trades and I've either especially in the beginning, severely in the beginning when you won't have a stop loss, I would start on a daily time frame.
End up on the phone. 1 minute time frame.
The account's about to be blown. I'm on the 30-second time frame at that point, and I'm drawing more trend lines. I'm trying to map things out, and I'm going deeper and deeper into a hole because I'm like, right, I've pieced it together now. This is the bottom. Add another position. It's going to spring from here. Goes lower again. I'm like, fuck it. 15-second time frame. Let's figure this thing out. And it's just that it is a rabbit hole. It's a spiral that will be very catastrophic to your results, and it's crazy because also and I say this all the time with crypto, you have to know when enough is enough. There has to be a point in time and a strict structure to your life overall and the markets. As an example, I often will look even at, I say modest, in crypto, the numbers are very different, but the amount of times I will take profit, let's say, when my investment hits 100, 200, 300, 400, 500%, which for some reason is perceived as small in crypto. But let's just say I take profit at that price point. A lot of people will then be like, yeah, but it went 300% higher. And that's because I know when enough is enough. And you need to have a threshold, although not directly correlated, it is correlated, because trading comes down to knowing when to get in, when to get out, and how many times you need to get in and out every day. You must have a cutoff point and you must have a threshold on a daily basis, because there is absolutely no need in theory that if you have one successful trade in a day, why the hell are you going for more? Literally. And that is the problem. It's an addiction. And this is the big problemo when it comes to trading. You have freedom of choice. You are in control. You have the entire control and freedom at your disposal. You have the free will to dictate how many trades you can take in a day. And you know deep down you should only be taking one trade every day. And you know deep down further, if you win a trade, you don't need to trade anymore. You've won. Get the hell out and come back the next day. But this is what makes trading so dangerous, because we cannot control ourselves, especially in the beginning. You are given the free will to place your money and risk your money in the market at any desirable time, location, place, and due to any reasoning you can think of. You are responsible for that decision. And this is why so many traders fail, because we all have the same charts. We all have the same time zones to trade from and the same market conditions. We are all within the same playground. Yet many people lose despite still winning. And that's simply down to the fact that we are given the freedom to do what we want in this market, but we cannot understand ourselves and learn enough about ourselves to realize when to stop. It is addictive. And we know that because we've been there. The amount of times I've won and made even 10%, let's say on Forex in a day, but my mind would tell me more. Or instead, that's actually what makes it so dangerous as well, is if you have a successful streak, and let's say you hit like 10% profit in a day, well, then you start to justify, well, I've got 10% today to play with now. Okay, well, an extra 2-3 trades aren't going to hurt. But then once you lose that, you go, well, fuck, I need to make that 3% back now. I want to end the day on 10%. And then, Lord behold, you end the day at 2%, if not minus 10%. It's a never-ending spiral, and it all comes down, theoretically, to self-control, which not many people have.
No, and yeah, that's just another example of, you said, like, even if you make 5-10% a day, what most people will do then, rather than just say, right, getting up and walking away, they go, oh, well, that gives me 3-4 losses that I can take, or like that gives me a few free trades that I can take because I've made this amount of money. So they'll go back into the market. But then, like you said, then you might have 1 or 2 losses. And that 10% that you had earlier in the day is now, like, let's just say you made £1,000. Next thing you're down to 600-700. You're thinking, no, I want that 1,000 back. And then you start trading more and then over leveraging, and again it's a slippery slope. The thing is with trading and psychology, and we give little examples here and there, but there is thousands and thousands and thousands of different scenarios when it comes to the market, when you're in losses, when you're in profit, and there's so many to talk about. But knowing when to walk away is key. And what this all comes down to, and over trading, like everything, I fully believe that the number one thing that makes most retail traders fail is discipline, or lack of discipline. So over trading, I said, you may be new to trading, you might even have never heard of over trading, like we didn't at the beginning. But you have to decrease the amount of trades you're taking and decrease those losses and those unnecessary losses. So how do you do that? Well, you need to have a plan. You need to have a rule system that you don't break no matter what. So if, let's say you're going to have 3 trades a day, if that's what you're going to tell yourself, or go down on the back of this video for a week or 2. It's only a week or 2, the market's not running anywhere. Just say, right, I'm only going to take 1 trade a day. I guarantee most people can't even do that. They can't just say, okay, I'm going to take 1 trade a day, because you just have this natural urge to keep jumping into the market. And it's discipline that comes down to. So, most people talk about the strategy or, the discipline on the charts. So you got discipline to wait for a setup, whatever your strategy is. But really, the most discipline you need is on yourself, on how many times you're going to take that trade. So, one day you might see your setup that you wait for every day. So you take it, but then if you win that trade or lose that trade, if you're taking just 1 trade a day, you need to get up and walk away. You either have a minus 1% loss, or if your trade plays out, you make 1, 2, 3%, you get up and you walk away. So that even if you were sitting in front of your computer and you did see that setup come again, you've got the discipline to say, I'm not taking it today. I've made my money or I've lost my money. I've taken my one trade or your three trades, whatever it's going to be. And once those trades are taken, you get up and walk away. There has to be a cutoff point. You know, trading, you know, a lot of people say trading is like gambling, but it's not if you have a strict rules and you have some strict discipline. If you think about someone in a casino, if someone goes in, yes, they can win big on the roulette machine or playing blackjack or something like that. But know when enough is enough. When your luck is in and you've made some money, and even if you've made really good money one day, like you make 10% one day because you hit a very, very good trade, you take your money and you get out. But what do you think is going to happen if someone's standing at a roulette table, playing that roulette table from 8 o'clock in the morning to 8 o'clock at night? What do you think is going to happen to them? They're going to lose, aren't they? So, you know, that's over gambling, over trading. Probably not the best way to compare the two, because I don't like to bring gambling into it with trading, because it certainly isn't. But it is, unless you have a strict set of rules and you have discipline. If you're not disciplined, then you are gambling. And so, you know, I don't like talking about it, but it is a good comparison in a sense, because unless you have self-control, which most gamblers don't have, unless you have a strict strategy and you apply discipline at all times, then you basically are gambling. So you need to have the discipline to stop yourself from over trading.
Yeah, it's going back to freedom of choice. It's the same with absolutely anything. When you're given that choice to essentially do what the hell you want, you are more likely to do something very drastic and catastrophic and something that would detriment you. As an example, an alcoholic. And the reason I say this, and I will use various examples where possible, is because most people in trading are addicts. They are completely addicted to the dopamine hit of pushing the button. And a lot of overtrading comes from the idea of just seeing the market slightly move and being like, this looks good. Sure. I've done it so many times. I'll be on my phone. That's the problem as well. A lot of it isn't even calculated at the desk.
Yeah.
I'll be on the phone, MT4, open up. Oh shit, gold's absolutely rallied. Sure, this is going to pull back. No basis whatsoever besides an instantaneous monkey brain impulse to just do something. Just pull the button, push the button, pull the trigger. But it's the same concept as sitting here now, giving an alcoholic 15 bottles of vodka on the table. Is that alcoholic going to just drink one bottle, or are they going to end up necking the whole thing and passing out? The same as a drug addict, the same as a food addict. Someone who is obese, put a Mackey's, a KFC, whatever else in front of them, Burger King, you name it, a Subway, are they just going to eat 3 or 4 chips? They are going to whiff the whole plate down.
That's a good comparison. I can see where you're going with this.
And it's the same as, you know, it is the exact same theory as giving people freedom of choice when they do not have self-control. It comes down to self-control.
I didn't look at it that way, but that's a very, very good example.
Thank you very much, sir.
Because you just have it in front of you.
Yeah, it's there for the taking.
Yeah, so you have no restriction.
Yeah. Nothing is stopping you. Because in your mind, like the same way, I guess it's the addict is looking at everything in front of them thinking, this is the cure to my problems. And you're looking at them candles thinking, this is my key to riches. So the more that person eats, the more they're chasing that stimulation. The more that person drinks, they're chasing that stimulation. But it's the same as trading. You are literally chasing a thrill with the belief it's going to be better off. And the same way that once that person's finished eating, they feel like fucking shit. The minute that person wakes up from the hangover, they feel like shit. The moment that drug addict wakes up from that heroin, do you think they feel fresh as a daisy? They don't. They feel awful. And it's the same as blowing your account from overindulging and over-consuming as well. It is the exact same concept, just digital. Yeah,
very, very good example there. I didn't look at it that way before. But yeah, if you've got all of this in front of you, it's very hard to not, like I said, it's very hard if you're on a diet to not eat food, or if you're an alcoholic. And, you know, that is why you have to have discipline. Probably be another psychology series we're going to talk about in the future on discipline. And, you know, I think we should just touch on it now because it does overlap into it a little bit. But discipline for me, I think I've already said this in this series, this episode, is for me the number one problem for why retail traders fail. And the problem is, for most people, is they might think that they're disciplined in the markets. They're certainly not, but they're not disciplined in anywhere else in their life either. And you know, the market is a very volatile, very emotional, you know, game where when you're in it, you know, it can make you feel all sorts. But if you can't be disciplined in other aspects of your life, how do you expect to be disciplined in the heat of the moment when you're seeing bullish and bearish engulfing candles, or your money's on the line and you're seeing blue and you're seeing red? You know, it is, in my opinion as well, I think trading is one of the hardest things to do. Like, to successfully trade is hard. It's not easy. You know, we don't sell an easy get rich quick life here for trading. We're here to tell you the truth. And it is one of the hardest things to do. But the reason for that is because it takes mastering yourself, mastering your emotions, and being disciplined. And 95% of the population aren't disciplined. So why do you think that 95% of retail traders fail? It's the same thing. Because if you can't be disciplined throughout your whole life, in all aspects of your life, then how can you expect to sit in front of a computer, in front of a chart, and be disciplined when that is where everything is heightened? You know, for example, let's just use an example, getting up in the morning. Most people will say it doesn't matter if it's 5 a.m., 6 a.m., 7 a.m. Most people say they're waking up at 7 for work, the alarm goes off, they press snooze, and they're waiting 5-10 minutes. They can't just get up out of bed and do what they say they're going to do. You know, little things like that, having a discipline to get up, or, you know, discipline to eat healthy, and discipline if, let's say, you're on a diet, or try to have a diet and not eat, as you were saying, the Mackie D's, the KFC, the food in front of you. So there's all these different little things we'll talk about in another episode. But discipline is key, and discipline in life, in all aspects of life, carry through to your trading. But if you're not disciplined in all of your life, we've probably gone off a little bit here, but I just thought I'd touch on it. But if you're not disciplined in everywhere in your life, then you're not going to be disciplined in your trading. To combat the overtrading, we'll get back on track now, sorry about that. But to combat the overtrading, you need to be extremely, extremely, extremely disciplined. And it's very, very hard. And it may take you some time, but hopefully from watching this video, and if you try to implement it and you start seeing some positive changes, hopefully that will help you continue down the road to get more and more disciplined. Because right now you might be taking 5 trades a day, 10 trades a day, and there's no discipline there. But you have to be extremely disciplined to be able to say, right, and I guarantee, again, like everything we say in our videos, if you try it, I guarantee it will work. If you could say, right, from the moment from this you watch this video, you're only going to take 1 trade a day, and whether that's a win or a loss, you walk away from the charts. You do not take another trade for the rest of the day. That means maximum you can take 5 trades a week. For 2 weeks or a month, you know, that's a maximum. It's still a lot. That's a hell of a lot of trades. That's 20 trades in a month, because you should trade every day anyway. But I'm just saying, worst case, if you're already taking 2-3 trades a day, minimize it down to that 1. Whether you win or whether you lose, if you can get up and walk away, you're showing yourself that you're in control, not your emotions, and that you're not going to overtrade, you're not going to over leverage, you're not going to get stuck into all of these bad slippery slope scenarios that happen when you continue trading every day. And what you'll see is you'll nearly definitely see a positive with your profit and loss. You'll probably see that you're going to have less losses and more profit. But what you'll also see is the way you feel and the way you approach trading will completely change. Because by not being able to be a degenerate, by keep trading 2, 3, 4, 5 trades a day and do all of the slippery slope mistakes that happen once you start having 1 loss, you're going to feel so much better when you come to trading, because you know, right, I can only have 1 trade a day. You lose, okay, I've lost, close the laptop, go do something else with your day. Next day you come, you win a trade, you make 1-2%, great, you feel good, close the laptop, you walk and go away. You're coming to the trading arena and you're feeling good every day. You're feeling fresh. Your psychology, don't feel like you've been beaten up because you've taken 3-4 losses the day before, and having, the psychology warfare that happens with trading. You're minimizing your exposure. You're minimizing yourself to the market. And you're able to keep yourself very cool, calm, and collective. And you can spend more time analyzing the market and waiting for those setups as well. And it's hard to put into words how much it can help in so many different areas. But if you try it, I guarantee it will work.
Yeah, less is more. Less is absolutely more. And that's a very famous saying that goes for just life in general, but it's completely applicable to the markets, quality over quantity. And just because you have the freedom of more and the freedom of choice to do more or consume more, it doesn't mean you should. And Bernie made a very good point. Close the charts, close the laptop, close the computer. Again, comparing to the example I showed, if you were to go to the bar and just say, I'm just having one drink today, if you stay in that bar and you continuously look at the drinks over the bar, especially if you're an alcoholic, you're going to drink more. You look at everyone around you, you're going to drink more. You go on social media as a trader and suddenly this person's made loads of money on this pair or this coin, you're more likely to trade. All of this stuff is subconsciously programming you and essentially just creating those trigger points, those emotional trigger points that are leading you to continuously pursue more money when it's just completely not necessary. And it's completely true. Even if you lose, one of the hardest things to do is close the charts off, or do not look at the charts and do not look for another trade. Because in that moment, momentarily, you are looking for revenge trades. The minute you lose, you are no longer sticking to your strategy until you have mastered the art of psychology. You are more likely to pursue the market in the pursuit of revenge, to try and make something back rapidly. Once that loss has hit, your state of mind is altered ever so slightly. To the seasoned trader, it's a little bit easier to overcome. But the truth is, it happens to all of us.
Yeah, even if you tell yourself that
Yeah.
you're not looking at the market like
Yeah.
in a revenge state, you nearly normally always are.
You try and justify it. You're like, no, 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 this is the setup. Like this is a completely valid setup. And then when it loses again, that's where it spirals. And that's the problem. If you break that rule, and like Bernie said, set yourself this challenge. If there's one thing to take away from this video, like every other psychology series, set yourself a challenge. Like we challenge you to do this for a week, and you will see a difference in your mental state as well. Not just your results, but your mental well-being will physically improve from this, because you will begin to build discipline, structure, and a routine throughout your day and your trading. And I urge you guys to try this for a week, and I guarantee you will see results.
Yeah, because it's all mental. It all comes down to like the mental side of trading, the psychology side of trading. And if you can do something, say you're going to do it and then do it, like I was just talking about earlier about waking up. Let's just say you've got to wake up at 6 or 5 in the morning and you get up, then you show that you've got the mental strength to do these things. If with trading, you say, right, I'm only going to take one trade a day, and you do that, it might feel very, very hard to do that. And if it does, then that's just the sign that you're over trading anyway. You know, us saying to you, we dare you to only take one trade a day, might already make some of you feel uncomfortable with the thought of only taking one trade a day. But that feeling that you're feeling now, there's something wrong there if you are feeling that, because for someone to say you can only take one trade a day and you not to like it, there's got to be something wrong with that. So we urge you to try these things that we talk about. And you know, as I said, the market's not going anywhere. The market's going to be here next year, 5, 10 years from now.
Yep.
So try something different. If you are struggling, just try it out for 2 weeks or a month. But it's not just the winning and losing that's going to get better. For one, you're going to have less losses, because you're going to be more selective with your trades. 2, you're going to have more profits, but you're also going to feel 100 times better. And believe me, when you feel better, you trade better. You come and you'll see that your wins will start improving, because you're not having the anxiety of worry or of losing, or having the fear of losing every day, or the fear of having big losses, because you know you can only have one trade a day. So you'll minimize it to one loss. So you come every day and you'll find everything will start getting better. Everything will compound. All the little things will start compounding because you're doing things positively. You've told yourself that you're going to do something and you're sticking to it. So you're proving to yourself that you're disciplined. Then you're going to feel more disciplined waiting for the right setup. Then you're going to be disciplined in other things with your trading, and everything will just start compounding together. And you'll start finding that you're having 3, 4, 5 winning days in a row. And next thing you'll see on the month that you're only having one or two losing days, or a few losing days, compared to you might have had half the month of losing trades, half the month of winning trades before. Now all of a sudden you'll feel like a real trader. You've decreased the losses, you've increased the wins, and you don't have that fear, anxiety, or I don't know why I'm saying just fear of anxiety, because a lot of people have that when they sit down to trade, because they have the fear of losing. But also you take away the excitement on the other side, the making money side. You take away the greed, because you can only take one trade. So once you take that trade, you then don't go and do all the silly mistakes that you used to do. And then if you can do this for a couple of weeks, because you need to see the effects and how it has the positive effects. If you can do this for a month, you'll look back and be like, wow, there's a big difference. And then that's going to spur you on to do it for another month. And then it will compound again. Then you'll do it for another month. And the next thing, you'll be 6 months down the line. You'll look back and you'll be like, oh my God, I can't believe how much my trading has changed, how many less losses I have, how many more wins I have, but also how great I feel. And now I turn up to trade and I love it every day, because I have one trade, I'm in or I'm out, and I'm done. Whereas 6 months ago, you're probably a bit depressed with trading, because 95% of people are losing. They're just putting money back in an account, might have a bit of winning for a little while, and then they end up losing. Or
Vicious cycle.
Yeah, or they're trading months in, months out, and ending up at break even, not getting anywhere.
Yeah.
You're on this circle of death where you're not going anywhere. You're just going round and round and round. So if you're on that circle of death and you understand what we're saying, then try something different. Try what we're saying. Build some discipline. Have a plan. Say, right, I'm only going to take one trade a day. If it win or lose, I'll walk away. Build discipline in other aspects of your life. We'll talk about that in a different video, and you'll see how it all comes together. But you have to be disciplined, and you have to make yourself stop over trading, because again, those silly trades, I'm all up for losing trades in the market, because like I said, everybody loses trades. I lost a trade yesterday. I didn't lose a trade for a month, but I had a loss yesterday. Everybody loses. It's fine to lose a trade. You have, like our last video says, you're going to lose. So that is fine. Have a loss, but at least let the loss be a proper loss.
Justifiable.
A justifiable loss. You saw your setup. You waited like a sniper. Even if it's just that one trade a day, or even if it's only 1 or 2 trades a week, but you waited for that trade and you lost because it didn't play out, because nothing is 100%. So it lost. That's part of trading. Move on. But if you're having these unnecessary losses where you're just jumping into the market and, for whatever reason it is, like we said earlier, there's thousands of different reasons, but deep down that wasn't a trade you should be in. That goes down as an unnecessary loss. That goes into the unnecessary loss column on your journal. Now, if you are journaling, and you should be, and you just make a note of every loss and write down how many of those are unnecessary, and then strip those losses away, imagine how much more profit you'd have, because you would have stripped away 10, 20, 50% or more losses throughout the year, where if you just simply not took that trade, had discipline to not overtrade, you'd be 50% up in the year. So imagine how much money you'd make, from one trade. Sorry to reiterate this, but from one unnecessary loss a week, just one stupid mistake a week, that's 50% a year, almost 48%. So would you rather be minus 48% because you keep making a stupid unnecessary trade each week, or would you like that to be on the profit side and up 50%? Most people, retail traders, never see 50%, but they certainly lose 50% very, very easily. So if you can just look at it in a different light, stop taking those unnecessary trades, have some discipline, and those unnecessary trades get stripped away from the losing column, and then your winning go up automatically because you're having less losses.
It's the art of doing nothing, in theory. What you need to remember, and what I would say as a takeaway, is the power is completely in your hands. That's the crazy part about all of this. You are the cause of your own downfall in these situations and circumstances. It is your lack and inability to do nothing. All you need to do is go to your charts every single day, do your analysis, execute one trade in line with your plan, and then step the hell away. When you actually break it down to the core of what it is in the most simplistic form, all you need to do is pull or push one button and then step away, win or lose. And then that's it, job done. And that alone can be the difference between you being a losing trader and a winning trader. Put that in perspective. one decision every single day, followed by another decision to stop making any other decisions, could literally turn you into a profitable trader. It's really that simple.
Yeah, and if you can know that you can only push that button once a day, you'll spend more time analyzing it, not over analyzing, but you won't rush into a trade. So you'll analyze. You might look at the evening before, you look at the daily candle closes, for example, say, right, this is what I think for the next day, go into the next day a bit more prepared. And you're going into it by being prepared because you've only got one shot. So you're going to try and take the right shot, not giving yourself room for error where you're almost subconsciously allowing yourself to have a loss. Go into it, fail to prepare, prepare to fail. So prepare each day for that one trade that you can take. And like Tori said, it's all about the art of doing nothing. And what did Warren Buffett say? The markets are a vehicle from transferring money from the impatient to the patient. So, impatient people are overtrading. The patient people, they're not overtrading. They're sitting back and waiting for the right opportunities. And they're taking less trade and making more money. Doing less, making more. Working smarter, not harder. So overtrading is a silent killer because it's making you have unnecessary losses. Strip those away and guarantee you'll have a lot more profit.
Absolutely. And to wrap up, I would say just remember and become conscious of the fact that when you're taking those unnecessary trades, deep down you shouldn't be taking those trades. Similar to what Bernie said about being impatient, in your gut those trades you take that end up losing, especially when you go back, if you do, and reflect on those trades, damn well in that moment you shouldn't really be taking it. There is always a little bit of a feeling you can often get with a losing trade because it's somewhere out of alignment with your overall trading plan and strategy. There is often that weird gut feeling you get where there is just a slightly heightened element of risk, or even if it is just because you've taken too many trades a day, a lot of the time, deep down you shouldn't be taking those trades. And that is the problem. We still go and bypass that gut feeling. We bypass it because our just sheer human instincts, that brain is wired for more, more, more. It is greedy. We can never have enough. And that is our biggest downfall in all aspects of life. So don't forget as well to almost tap in to your brain and to your feelings, your emotions, and your subconscious mind in those particular circumstances to stop yourself from making those very, very fatal, stupid decisions. Because in the moment, you won't realize it. You may question it, but you're going to go and bypass it. And then once it loses, and then once you lose money, that's when the reality hits you. But the problem is it's too late by then because the money's gone and it cannot be retrieved. The only way it can be retrieved is by trading more. And then you fall into the spiral. So if there's one thing to take away from this as well, is be conscious of your decisions before executing and then be conscious of your decisions after. That will make or break you as a trader.
Yeah, and just to wrap up on what you were wrapping up on, when I started being successful in trading many, many years ago, it was something I realized was, and I think we've said this many times already in this series, it's not so much about analyzing the charts. Again, everybody focuses on profits, not the losses. Everybody focuses about analyzing the charts, but not analyzing themselves. The more you analyze yourself, and if you've got a journal for your trades, most people might not do that, but you should be journaling your trades. But everyone will write down what happened in the trade, etc., etc. But that's all good. But what's more important about journaling is journaling yourself. Why you took that trade. How were you feeling? What was the emotion at that point? Where were you when you took the trade? Were you at work? Did you jump into it too soon? Did you have FOMO, fear of missing out? Was you over leveraging? What was the reason? That is where the gold is into becoming a successful trader. Not so much analyzing the charts, because once you learn the charts, you can read the charts. That's 20% of it. 80% of it is psychology, and it's analyzing yourself. So every time, and a very important thing that you should do is, as you're about to press that button, and hopefully after this video, you're only going to do it once a day. When you press that button, have in your routine where you say, why am I doing this? Am I sure? How am I feeling right now? Am I having fear of missing out? Do I know that this is the right trade? Just analyze yourself for a split second and just look inward. the more that you look inwards for yourself, the better you're going to be, the more profitable you're going to be.
Okay, so to actually wrap this up, I would just say take on board absolutely everything we've said here. But more importantly, as with everything, put it into damn practice, guys.
Please.
Put this into practice and then let us know in the comments what you think and what you feel and what differences you've noticed yourself from implementing these simple rules. Remember, this applies and is applicable to all forms of life. This is applicable to your everyday life, knowing when to stop, knowing when to say no, knowing when to walk away. When you combine that with regular life and then apply that to the markets, you are going to become an unstoppable force. But it comes down to you. And it comes down to you being able to control yourself. So if there's one final word, I will say, control yourself.
I'll say no more. It's perfect to end. Okay. Control yourself. That's what it's about. Psychology, control yourself, self-discipline, self-control. You'll be a successful trader.
Hope you've enjoyed this video, and there's many more to follow from there.
Thank you very much, guys. See you soon.
See you soon.